Hey guys, ALLIN Crypto here, and welcome back everybody for another YouTube video. This is going to be our daily Bitcoin update video, and we've got quite a bit to discuss. You know, what's coming for Bitcoin over the next week or so. It's going to be an interesting week in regards to data. I'm going to jump in and cover that in a bit more detail in my daily cryptocurrency market update video, which comes out at 1 p.m. UK time. But this is really going to be Bitcoin specific, and I'm going to share a picture that I took from a book that I'm rereading, and it talks about when to buy from an investment stance. And it talks about the weekly chart, which we're still not in that kind of buy territory for an investment. But from a trading perspective, you know, Bitcoin essentially could be looking to move up to this previous area of consolidation, or at least tag it. You've got this nice sort of area of hot air, if you will. There's not much price action, not much resistance here. The next big resistance port, you know, you're looking at 26k up to 28k, and could Bitcoin potentially be heading there? It is absolutely possible. Even if it gets up there, do I think, and let me reiterate this because I get lots of people saying that I'm chopping and changing. No, our macro view is very much still intact. We think ultimately that there are lower prices to be had throughout the entire cryptocurrency market. We think that the environment that you're currently in is not one that supports this being the new bull market being kind of ushered in. And I do think this is going to be proven to be a relief rally. You know, relief rallies in any kind of market or any kind of bear market are common. You know, we had plenty in 2017, and of course we had plenty in 2014. It's part and parcel with a bear market. And this still is within the parameters, more than within the parameters of a relief rally, you know, and we do lots of analysis on that. Talking about yesterday, we were looking at money flow, money supply, the M1, the US M1 money supply. We've also done a number of things like look at liquidity and really shown that doesn't support this being the start of the new bull market. And in actual fact, I think markets generally, and I think a big catalyst is going to be the equity market rolling over, are going to see lower prices. But talking about where Bitcoin currently is, I want to pull up this picture that I took from a book that I'm rereading currently. And it talks about an ideal buy for an investor. And it talks about this kind of area of breaking out. And you can see they're using the 30 weekly moving average. And they're using this kind of fractal, if you will, to show where the breakout is. Now, remember, it's talking about an ideal buy for investors. This is the 30-week moving average, okay? So the moving average that we had on here is the daily. If we look at the weekly, there's no confluence to this being the ideal buy that the author of this book is essentially talking about. Be interested to see if anybody can guess the book in the description. An OG in markets, you know, talks, I'll give you a little clue here, a lot about the tape tells all, and referring to markets as the tape, so you can tell that that's how old this book is. But the principles, I think, really still do apply. So if we look at the weekly, you know, we're not at that buy zone. Potentially looking for a buy opportunity would be when we do see this kind of play out on the weekly, which we're not there yet. But applying it to the daily, you know, this looks very, very similar, in my opinion, to what the author is essentially talking about here. So I'll move this so that you can see it. You know, this looks very, very similar. Can you notice how you sort of consolidate below where you actually broke into the range, where you had this one kind of final push up? You then in this lower sort of range, you push back above it, you break through your EMA, you come back to retest it, you come up again, you come back down, and you actually find support on the area where you essentially entered the range, came back up and struggled to get above it, and just consolidating above the EMA. This is one reason we took longs yesterday on altcoins, because Bitcoin looked like it wanted to see that kind of rally. You know, it's very much consolidating here. Is this the potential play? And does this potentially take you back towards here? Potentially. What are some key things to watch? And we'll talk about coming back up here, because this is key resistance. You know, it would not be out of the realms of possibility that we do get up to 26, 28k. Altcoins will do significantly better for anybody looking to capitalize on that. But it's what we do here. And does this signal, you know, the new bull market coming in? Well, for me, no. If we look, and I want to point something out in regards to this schematic, actually, because volume is extremely important. Volume is essentially how you'll tell the confidence behind the move, or the what would be the right word? The backing behind the move. You know, if you see a lot of volume coming in, you know, that kind of gives you a good idea of strength. The one thing that I want to point out is you haven't really seen particularly large amounts of volume coming in here. Could you potentially, you know, and this is what we need to see. We need to see a real uptick in volume here to really support this move back up towards here. You haven't really seen that yet. And in terms of a weekly, you know, you've seen pretty lackluster and somewhat pathetic volume that, again, doesn't support the idea that, you know, this is where big players are loading up, ready to start the bull market again. It just doesn't work like that, guys. You know, if this was going to be a V-shaped bottom like you had after March 2020, you'd need to see that volume really pick up and show you that your big players are leveraging in here. Otherwise, you see this kind of long, drawn-out consolidation phase where your big players are sort of hiding their entries and getting ready to see that further upside continuation. So I don't think this is, from an investment point of view, the time to be accumulating. We made that very clear. We still think there's lower prices, not to mince my words at all there. But for now, you know, what are we looking at? Are we looking at maybe pushing up towards here, getting back inside this box somewhere here, potentially? I do think that's actually more likely than the immediate downside. Now, what you've got to be careful of in this kind of market is it is a downtrend. It is very much a confirmed one. We've looked at a number of indicators that really support and suggest this on the weekly. You know, there's no bullish divergences here. Your RSI is very much supporting the move that you're currently, or the downtrend. We've got a number of other indicators that we won't bring up. But essentially, this is still very much an intact and supported downtrend. Now, talking about coming back to these levels, firstly, let me just cover what we really want to see to see that upside and push towards here. Well, you want to see a close above 24K. So we had actually mentioned that the issue you've got, and it's why we kind of took the downside position from here, was that you still now, actually, if we check on the weekly just to make sure, you actually haven't closed back above this. You actually haven't closed back above. Bear with me a second, guys. You actually still haven't closed back above your 24K range. So we need to see that close. It was very, very strong resistance. If you look on the daily, you can see just how many wicks had centered around it. You know, every time you put a foot through it, you got slammed straight back down. For me, really what we need to see now is a strong move, a kind of potential retest of the 24K, showing that it's now support, and then take the upside. So this is what we're really looking at. And the thing is, once you've made this move, you know, it doesn't take that much, certainly whilst markets are as low volume as they are, to push back into this range. The thing to really watch here, though, so first of all, if you come up here and you deviate back below it, okay, that's probably a good sign that you're going to start round tripping all the way back down here, because you're failing it again. It's proven itself as significant resistance, and you've got the support of the sellers to kind of confluence that. So you need to get back above that 24K range. And this is what we've been saying for a while now. It's round number to round number, okay? If you're below 24K, look for 23. We said that over here. You got 23. We actually got well below it. You come back and reclaim 23, look for 24. And this is still kind of the play that we're looking at. So continue to look for that 24K. You break above it, and then back below, you look for the downside towards 23K, 22K, and vice versa. So if we can break above this, you know, this is the next kind of area that we're looking at. And it's not out of the realms of possibility to suggest that we do get into this zone. Still, again, well within the parameters of a bear market rally. The interesting thing really is going to be, if you look at what you're running into in this zone, this is going to be significant resistance. So this is going to be huge resistance. That's if we get here, guys. Remember, we're very much on eggshells right now in regards to everything going on. So if you do see that push towards this zone, you know, it's what you do interacting with this zone that's going to be key. So if we get that push above 24K, hold the 24K, look for this, some sort of rejection, you know, and this would be the journey if you were going to get up here. So this is the bullish case, and then ultimately I think it comes right back down. But this is even still well within the parameters of a bull market rally. sorry, bear market rally. So this potentially could be a possibility. Potentially. Right? It doesn't have to happen. You could quite easily deviate on one of these lines, come back below and seriously get that downside, which is going to be driven by everything. We're still very data dependent as a market. But in regards to a potential play that you can't rule out right now, you know, Bitcoin could be looking for the upside here. This schematic certainly supports it on the daily. Again, remember that this schematic is referring to the weekly chart on the 30 moving average weekly, and talking about an ideal buy for investors. We're not there yet. You know, I still think we've got this down leg. Does something like this play out as well, allowing this EMA to kind of creep up potentially, and then if it does reject off that, you're still well within the parameters of this market, you know, being a downtrend. There's a lot we're kind of looking at right now. You know, it's been pretty hard, like I say, to call over the past week from an intraday basis, but you know, I don't think this is something you can quite rule out just yet. And what happens when you run into these levels, I think, is going to be very, very telling. And I ultimately don't think we get much past here at all before we get that kind of slam down. And I think that's largely going to come moving into September. You know, you've got to remember, and it's something that we talk about consistently on this channel, is the kind of macro view of things. And it doesn't look good. You know, if market's driven from liquidity is getting ambitiously taken off the table. And we're going to cover a number of really interesting things moving into the week ahead. Also, you had Larry Fink actually sell, I think, the largest amount of his shares of his own, you know, company, essentially. The last time he did this was right before the March 2020 crash. And he's actually sold a larger amount now. So that kind of goes to show you, if your largest asset manager in the world is doing that, you know, what is potentially around the corner. But short term, we'll play it. You know, we play both sides of this market, even if we are biased bearish, more downside. You know, we think we're in a bear market and we think this rally eventually gets killed. I'll take the trades, I'll take the longs and the shorts whenever they present themselves from an intraday basis. But from an investment point of view, not interested in accumulating here. Still, for me, the risk outweighs the reward. And that's really all that there is to it. So it's going to be interesting. Things to watch out for today really are getting back above here, getting back above your 24K range. You can see it's proved very worthy resistance and a very worthy sell zone. The issue that you've got is traders will know this and they'll actually try and bid this up to the downside. So you probably have buy orders in regards to shorts set around here. So you need to really see this kind of a push and do something like that to get that further upside. So you need to take 24K. That's what you need to watch out for today. You take 24K, you convincingly hold it, look for the longest to the upside. You come back down, you break below it. Well, you know what the score is. You know, you do something like this and deviate from it. You know that you've got your downside coming, and we'll just play that range to range. But there is definitely the possibility that you do push back into this zone. I wouldn't be surprised to see Bitcoin at 26K. The thing is, you know, good thing for me because that sets up decent shorting opportunities if we get there. But you can't rule this out as of yet. So this was really just a Bitcoin update video. It's been quite a nice push. The equity market, which we need to pay a lot of attention to, is at this kind of key resistance as well. You've also got your NASDAQ, which is a significant neckline. You know, does this capitulate? If that starts to capitulate and see downside, Bitcoin and cryptos going with it. You've got the futures market, which is actually holding. Talking about your EMA. 30 EMA, the guy whose book I took that picture from, you'll kind of probably be able to guess who he is by his love of the 30 EMA. And yeah, so that's really all I've got for you in this video, guys. The UK market's not doing too badly. The Asian market is somewhat mixed, not spectacular. But that's what we've got for you guys. So look for the 24K range. We can hold that, get above and hold it. Look for the longs. We come back, we deviate below it, look for the shorts down to 23K. All I've got for you in this video, guys. If you enjoyed the content, like, as always, appreciate it. So as a comment, I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, guys. Catch you in the next one.